Moving on from IT to FMCG, for FMCG Major Hindustan Unilever HUL, rural recovery was slower than expected as volume growth managed to miss the street's expectations. Now, the net income too declined 3% sequentially, missing the estimates. My colleague Vinny Motiwala is here with the full analysis. Take it away, Vinny.
So when you look at HUL's numbers, first cut seems like a bit of a miss that has come in on the profit front, as well as slight bit of a miss on the margin front. Revenue that has come in line with expectations. So revenues seeing a growth of around 6%, while the margins of the company have come in at 23.2%, around 23.3% as well. Now let's move on and talk about the volume growth of the company. We were expecting around 5%. That has come in at around 3% for the company. The volume growth, underlying volume growth is what we're talking about. So that has come in at 3% for the company. Now, overall, when you look at it, home care business, that's seen a growth of around 10% as well. And the FMCG business, what the management is highlighting is will continue see rebalancing, pricing, volume growth equation will gradually start improving. Consumer demand will gradually start improving as well. Beauty personal care segment, that's seen a growth of 4% as well. And mid-single digit volume growth is what beauty and personal care segment has seen. Now, other than that, when you look at it in terms of commentary, they said that rural growth has started turning positive for the FMCG industry. What they're saying is more than 75% of the portfolio has actually gained market share, and growth was competitive in this 75% winning market share as well. So let's keep an eye out on that. They said the margins have improved in all the three segments. That has remained healthy as well. Near-term operating environment, maybe a slight bit of a blip and volatility is what we could see coming in there. But consumer habits are typically seeing a bit of a recovery there. And pricing growth will automatically start tailing off, and we'll see more of a volume-led growth as well. They expect to sustain the volume momentum going forward as well. So let's keep an eye out on that. And obviously, as of now, commentary seems strong for the future, but HUL's Q1 numbers this time, slight bit of a miss.
Our margin, as I mentioned, is squarely focused on the line of gross margin this point in time. We want that to go up. And of course, what comes in EBITDA ultimately get driven by amount of money that we need to spend in A&P. So that will be more of an outcome this point in time.
The business is in a great shape. It's a great business. Very, very strong positions when it comes to market leadership positions of our brands. I see very strong, to your point of process, very, very rigorous processes. Our talent, depth and quality is absolutely first class. We have also done amazing amount of work on community. So I think we're living our vision and purpose of what's good for India is good for Hindustan Unilever.